Okay, everybody, here we are. Today is Fed Day, and we've all been waiting for this, haven't we? Anyway, we already know what's going to come out of its mouth. I think for the most part, there is no chance whatsoever, in my opinion, that the Fed will be surprising the market and raising rates. Again, I have no clue where some of you are getting this from. In fact, a lot of you have written to me, Greg, you're wrong. You don't know what you're saying. The Fed wants to crash the market. I mean, this must be, I wish someone would let me know. This has got to be another YouTuber out here who's got a big audience saying the Fed is going to do this. It ain't happening. Okay, whoever's telling you this is dead wrong. Seriously, the Fed will not be surprising the market today. No shock, no surprise. The Fed does not want to bring down the market yet in any way, shape, or form. All the Fed wants to do is continue to inflate its balance sheet. That'll pull the stock market higher, regardless of what happens today, and we'll talk more about that. Anyway, we got some economic news today. No surprise to you. Yet again, it's terrible. The U.S. trade deficit continues to balloon. We are sadly really exporting much less than we are importing. What else would you expect here in a free fall economy where the Fed itself admits our economy is slowing? The CPI data confirms this. We all know it. But, we're supposed to be in a big boom right now, and that's why the Fed is going to maintain emergency monetary policy, quantitative easing. Let's go, go, go. And that's exactly what's going to happen today, period. The freaking end. It's a freak show on an epic scale. Anyway, so this morning, stock futures are slightly higher. Okay, that's lovely. Pointing towards a higher open for the market, but we'll see where that goes. Again, I expect a lot of volatility here in the market when the Fed makes their announcement at 2 p.m. Eastern Standard Time. So be ready for that. And I'm going to be in my chat room on my website, traderschoice.net, doing a little blow-by-blow. And it's going to be so fun. I despise the Federal Reserve. They are public enemy number one. And I can't stand listening to Fed chair thing, Powell, who's going to lie and lie and lie and read his script. Watch how he responds today when he takes questions. These are mostly scripted. He looks down and reads the answer. Again, nothing is what it seems in this environment. Okay, let's move forward. 10-year yield did come up. Okay, this is where we want to be. We got crude oil getting bid higher, but the dollar right now is catching a bid. So not a great setup for the market so far in this pre-market zone, which we're in right now. What else is happening? Cryptocurrency is getting bid higher across the board. Bitcoin back over 40,000. No surprise to you. What else is happening? Gold is slightly lower. Silver is catching a bid. Okay, just lovely. There's no price discovery mechanism there. They're going to play their game, people. They're going to play their game with precious metals via the derivative. You know that. There's nothing real about the price action of precious metals in this environment. It's absolutely rigged to the downside. As a matter of fact, it's an inverse bubble. It's an inverse bubble, and that will normalize at one particular time. But that's a beautiful thing for you and me. We're just going to keep doing what we do, and that is bet against the debt, become your own central bank. In other words, hold hard assets. Build a vault stuffed full of hard assets. Physical gold, more importantly, physical silver. Physical silver, people. Like I've said recently, if you got to hold one asset, recently, I've been saying this for years, one asset, it's physical silver. Period. The end. Now, let's talk a little more here about what we can expect and how this market more than likely is going to play out. Like I said, I expect some volatility after the announcement here, which means the market's going to go wild after the Fed announcement, but probably more so in the post-session if he takes questions. Okay, we'll see what comes out of its mouth. It's going to be more of the same. Our economy is improving at a moderate pace, which it is not. Our debt to GDP ratio continues to balloon. Our debts and deficits are skyrocketing. There is no recovery whatsoever, and I do fully expect another shutdown of the economy, or at least parts of the economy. 1-2 punch shut this down so they can again allow central banks to finish what they started many decades ago, to be the lenders and buyers of last resort. They are the government. The rest of it is just a smoke screen, just something for people to look up to and say, oh, I wish this person were president. Oh, I wish that representative would do this. They don't represent anything. They represent the corporate agenda, and they have no say-so. It's the banks. Whoever controls the cash controls the world. All right, and that is the central banks, who dictate pretty much everything. And I think you already know that. Again, like I said yesterday, I did read the comments, and they were kind of interesting. I asked, how many of you believe that the Federal Reserve chairperson is going to be dragged in front of a congressional committee and asked why he's not maintaining his mandate of price stability? Won't happen. And most of you tend to agree with me on that. We will see much more inflation, period, the end, and it is widespread, despite the fact that the thing today that's going to speak, Jay Powell, is trying to convince you that it is contained. It is not contained. And the IMF backs that up as well. Their second warning yesterday about inflation not being transitory, and it will persist. Not only will it persist, it will get worse here, as again, the debt to GDP ratio here in the United States explodes, as the Fed continues to buy debt through one door, issue debt through one door, buy it back through another door. This mechanism, I don't think people realize how massively inflationary it is. We're just starting to see the effects of it now, and it's not going to stop. The Fed is going to ask for patience, okay? They're looking for any mechanism possible, okay? And they're going to create them as we go along here to continue to inflate, to continue to move goalposts, okay? You're going to hear a lot of talk about tapering, a lot of talk about liftoff or whacking off, as I always say. About cutting back on purchases. There's no intention whatsoever in the Federal Reserve to do this. Their goal is to hyper-inflate their balance sheet, which will push the stock market higher. Now, like I said earlier, if this market drops after the Fed announcement, I'm going to be jumping in here and buying that dip. Okay? If the market decides to go higher because it loves what Jay Powell said, all the market wants to hear is more easy money is going to pour in here. And with a pending second shutdown of the global economy here, the Fed is going to have to buy more. You know that. I've been telling you this for the longest time. The Fed's going to buy more. It's going to increase asset purchases. That's the big secret you're not supposed to know. There will be no tapering, no cutting back on asset purchase. The Fed will be increasing. That's the secret you're not supposed to know. With debts exploding, deficits exploding, debt to GDP ratio exploding, the Federal Reserve's balance sheet exploding, an economy in collapse. Wherever you look, the economy is in free fall. Okay, so what does that mean? The Fed must continue what they're doing and is looking for every reason, and will create them, to increase asset purchases. Like I always tell you people, nothing is what it seems to be, and nothing is by accident. All right, this guy here loves you a lot. I'll keep you on top of all this. As always, to me, and I believe this to be true, you are the most educated person out there with regard to the ins and outs of this market if you follow this blog. And I am very proud to say that. I'm very proud of you. All right, I'll see all of you later.